Welcome back, guys. It's Jason with your Hopium free crypto and economic cycle update. Now, I've added in the economic cycle because we've been looking at real estate and how that money is flowing between different asset classes over the last few days. But it's something we've been following on the channel for several years. The economic real estate cycle is still up. I know, despite what people may believe, that there should be a crash that wipes out everything and we restart again. It's probably not at this stage just yet. So this is what we're going to look at in today's video as the major inflation hedge. Yes, I still believe Bitcoin and cryptocurrencies also have a good inflation hedge to be playing out there. And of course, metals will have their day again, but we'll look at those on the chart as these take quite a long time to set up and then move forward with their moves into their mooning stage. So without further ado, make sure you've smashed the like button, tap it, do whatever you need to do to it. Also subscribe to the channel, bell notification icon. On our way to 260,000 subscribers. Thanks very much for all of your support and appreciate the comments down below as well. I know what we talk about isn't the mainstream way of thinking, but retail investors always get caught out. They believe there's got to be a crash coming. And unfortunately, I don't think they're going to see that anytime soon. We've talked about this when it comes to the wall of worry. You know, the bull market, typical way we see in a bull market, the markets continue up with all of these fears, inflations, interest rates, wars, everything else going on. Now, I'm not trying to play light on the situation. There is a lot that is going wrong in the world and people are suffering. But if we're just looking at this in terms of a perspective of making money from the market, then we have to put those emotions aside. We can talk about those another time, maybe over a beer. So let's have a look at silver. Let's have a look at the stock markets and, of course, update just a quick touch on the real estate cycle because not much changes day to day, but it's important just to remember, especially when all of the major news is out there that things should crash and the Fed's done this and property prices should fall, etc., etc. Now, before I get into it, our sponsor for today is SwiftX. Aussies, go and check it out. Link is down below. Get set up while the markets are down. Good times to be getting all of your ducks in a row. And they also have staking over there with all of these cryptocurrencies. So link to that is down below for your $10 of free Bitcoin. Internationally, you guys can check out Bybit. There is a lot of sign-up bonuses for Bybit down below. Of course, don't use leverage if you don't feel comfortable, but you can definitely get your account set up. It's a no KYC exchange, which is pretty good if you're looking for that. And you can see those links down below for your bonuses, over $3,000 there, depending on how much you are putting over onto the platform. So let's have a look at silver update from yesterday. Basically, we're up 1%. All right, so we had the scare. The news came out that the Fed is looking to increase or actually increase interest rates and then start to take some capital off their balance sheets. Not much has happened to the markets. That's it. I'm not going to bore you with that time and time again. The Nasdaq, same sort of thing. If we get this crash down by, let's look at it from the absolute highs here. Go from the high down to our 50% level. About 30%. Call it a round number of 30% right there to the 50% level. That for me is still in a bull market and we get some sideways consolidation, some heat out of the market. That's a really nice thing to see so that we can build another foundation into this next stage of the bull market. I'm not saying it'll get 30%, but it could fall that far. And for me, it's still a bull market. Looking at the S&P 500 as well. Now I've got this part circled. We're on a monthly chart. This is what happened back in 2015, 2016. The market fell 15%, and this was a scary time for a lot of people. This was a lot of bad news, but as you can see, not much else happened from that point. It happens very often, and again, it happened in 2018. Had a fall, call it from the top to the low here, another 20%. All right, we had an even bigger fall during the COVID crash. So the main thing here is we could see these markets drop by 15, 20, 30%, and we're still in a bull market. Basically, it's just coming back to test the old highs here. So 3,500 on S&P. I just bring that up because this will get crazy. The markets or the news that's out there will continue to report that you shouldn't be investing, but definitely stick to your plans and think about what happened in 2020 when the COVID scare, when the world should have come to an end, that was the absolute best time to be buying stocks, to be buying property, to be buying crypto, to be buying metals. It was the best time, the best opportunity that we've had in the last 2 years. So if we do get another one of those, I doubt it'll be that big of a drop. And it's probably going to be another great opportunity, but we'll just need patience for that period. Speaking of patience, property definitely needs patience. Now, I don't think we're going to see a massive crash. I know that it's not what a lot of people believe, that we should see a crash in property prices. Love to hear from you guys down below. What's happening in property in your area of the world? Definitely in my area of the world, we've been going up 25, 30%. I don't think that's going to continue year on year, 30%, but maybe we'll see 10 or 15% leading into the peak of the real estate cycle sometime after 2026. Maybe we'll get a peak around 2024 and then we plateau. I don't know. We're still a few years away from that. But in terms of the overall economic cycle, we still have several more years to run into this top. And it's already showing what's going on right now. Now, I bring up this because this is to show the real estate as being the biggest holdings of value in the world. $260 trillion of residential real estate in 2020. So there's a global real estate universe in comparison. Agricultural, 35 trillion. Commercial, 33 trillion. This is 2020. You could probably comfortably throw another 10% on these values. So 260 plus another 60 is 320. Throw another 10%, 350 trillion. Basically just throwing numbers at the board here. 350 trillion. That's where the majority of the world's assets are. All right, but we look at crypto as 1 trillion in Bitcoin and 2 trillion for the total market cap. Gold is around 12 trillion. A lot of the wealth in the world, the big old wealth, is in land. And I don't think land is going anywhere anytime soon, especially when interest rates are so low. So just looking at the nominal interest rate, well, banks could be lending out money at 2% or 3%. Now, they'll also have the inflation factored in there. So if inflation is, say, around 6%, they're lending out money at 3%. I know it could be a little bit different, just using an example. Then they're really only getting negative 3% on their money because obviously inflation is eating away at the rest of that. Now, in terms of where banks can invest their money, well, they have a lot of money and land is the biggest area that they can put their money. It's not going to be in cryptocurrency. We would all love that, but it's just not ready yet. It has to grow slowly. And so if the money's going into real estate, well, at least that's my opinion of how the economic cycle is going to continue on, then this is obviously going to continue to push up real estate prices from where they are now. 350 trillion across the world. And then obviously stocks and the rest of it are going to carry on with some of that money going into it. So this is going on for another few more years. And I can't see that slowing down anytime soon, especially with the wall of worry. People are very worried about where money is going at the moment. But unfortunately, that's what happens to retail. They get worried. They think the market should crash. They're proven wrong at the worst times, just like they were in 2020 when they believed the market should have been over. Best times to be investing. Let's take a look at some of the breaking points for Bitcoin and Ethereum. And I know this is starting to scare some traders and some investors out there. They're just wondering what is going to happen. Should I be selling out of my cryptocurrencies? Let's take a look at those points and see whether it's worthwhile for your portfolio. Now, this article here, crypto traders fret an overheated futures market amid fall in spot prices. Yes, we've seen the markets fall. Not telling me anything new at this point. I see those comments. All we're looking at here is there will be far more damage below 40K where more leveraged long stops live. Of course, there's going to be long stops under 40K. Back in September, we had the low of 39,600. So I would assume it would definitely have stops under this point here. This was an extremely strong low. And if that breaks, then it's just going to prolong how long we go through an accumulation range. The next point is the higher low that formed out of the bearish period. So we've got that nice spring up and then a retracement into early August. Those lows are at 37,300. So pretty close to each other, just a couple of grand off. 37,300, 39,600. And then my 50% level, or GAN's 50% level, is at 36,000. So 36, 37, 39, very close in that mid to high 30s. If we get the breakdown from those points to test these levels, I presume we'll probably have some sort of spike. It would be lovely to see a spike low into the low to mid $28,000 range and then start to work its way back up. That'll take out those leverage longs. That'll scare off even more retail. And then we have that nice opportunity to begin reaccumulating and working our way higher again. Now, of course, if it breaks down from 28,000 around 29,000, for me, that's the end of this period, and this was distribution rather than accumulation. The reason I picked that $28,000 level, it was the lows back in January after the market ran up hard and then corrected. It was the lows during the May, June, July sell-off. And so if that support breaks, then I suspect we'll probably come somewhere back between 20 and 30,000. We're not there yet. We're a long way off. I get all that. It's just to keep an eye on those areas. As I said earlier, maybe this is a time that we get a little bit of a bounce, maybe a relief rally, because we've just taken out the 4th of December low. We've gotten very close to this September period. So that's 4th of December. We got very close to the September lows here at 39 to 40,000 as well. Some volume has started to come back in on Coinbase. So it'd be nice to see a bounce from this point and just see how the market reacts from this low that it's just put in at $40,500. If we get that and we get that accumulation look on the chart, then that might be a good time to start reaccumulating some of the blue chips. In particular, some Ethereum as well. So Ethereum is broken down past its 50% at the moment, and it closed underneath it today. That was 3,300, and we've just gone to $3,065 is the current low on Coinbase. Now the next lows are at 26 and around 2,700 USD for 1 ETH. So if those break down, then we're looking back into this zone between 17 and 2,700. At the moment, we're still there. We've got a little bit of volume coming in, so maybe we get this bounce out of these levels and we don't go past this breaking point. But this is the breaking point from the basically, if we get past that, then it just prolongs the sideways and reaccumulation for cryptocurrencies. At the moment, holding okay. Looking at this article, this one is moving more of the funds into DeFi. I suspect we're going into DeFi as the next narrative shift because it actually makes money. So when the market is down, ETH is down, Bitcoin is down, the majors are down, people want income producing assets. Arab Bank Switzerland is quietly getting into DeFi. The Swiss sister entity to Jordan-based Arab Bank is offering clients access to Aave, Compound, Uni, and more. So the other tokens I have here are FTM, Synthetics, Chainlink, Matic, The Graph, Curve, one of our favorites on the channel, along with Yearn Finance, another one that we were looking at for an entry here as well. So the idea for now is just for our clients to buy, sell, hold some of the most prominent DeFi tokens, but we do believe traditional finance institutions will be replaced in the near future by these protocols, and we want to be part of this change. So naturally in the future, we want to go deeper into these kinds of decentralized services. Maybe this is the start of many other banks getting into this, or funds. Maybe they're the only ones, and it's not going to continue on. But I obviously I'm in cryptocurrency, so I think we're going to see more of these come into the space, especially with, like we talked about earlier, interest rates not being that high. And of course, when you're in DeFi, you're getting 6, 7, 8, 20, 30%, sometimes more, just depending on which protocols you're with and how you are farming those tokens or staking them. So they're also looking into Tezos staking blockchain as well. Let's take a look at Atom, which is one of these cryptos that has taken off. You can see that we had the big spike day, and I'm looking at this as potentially coming back from this point. Luna had a similar pattern recently, and we've seen from that, Luna has fallen away. So look at Luna here at $69 now. This is the circled bar. I posted this on YouTube and to our members in Patreon. So if you're checking out Patreon, also looking at our trades over there, you can see this bar here. This is your shooting star. It took off just a little bit higher. You're never going to get the exact point, but this is pretty close to this top. And now we've seen the market absolutely tank from that point. So this is at the end of a major run. We had a shooting star, etc., etc. This is a bearish signal, even though the market may go up a little after that. This, for me, is not a good area to be entering in, especially with Luna. Market was running pretty hot at that time. The other crypto here is Chainlink. Now this is early days. It's finally got its higher low, next higher low. It's broken past some pretty good resistance levels. This is Chainlink versus ETH, and I definitely want to see my cryptos go up against Ethereum and Bitcoin. Otherwise, I'm better off holding Bitcoin and ETH. Chainlink BTC is also started making its move. So for me, I would be looking at this and just waiting to see some sort of correction to see where this comes in. Ideally, you want to see these higher lows come in. You can see it over here already. We've got a nice higher low back at 37,000 and then at around 41,000. And then Link USD is at $26.70. It's really started to push its way high. It's getting rejected at 50% now on some strong volume. So with that in mind, if this breaks past, even stronger for Link because now it's up, it's past its resistance levels on the USD value. It's taken off on ETH and BTC. So I'd be looking for a pullback because this is giving me the signal that that Chainlink is ready to head higher, and Link BTC and Link ETH are also looking strong. So it's basically checking the USD, the ETH, and the BTC. So if you want to learn more about the trades and altcoins that I have in my portfolio, why I'm buying them, why I'm selling them, check out Patreon. Link is in the top of the description. Also check out Bybit and SwiftX. Links are down below to be trading your cryptos over there. And there's also staking on their platforms. So check it out. Big bonuses, especially for Bybit down there as well. Like the video, subscribe if you haven't already. Bell notification icon. I know you guys should be hitting that bell. And I'll see you guys at the next video. Till then, have more fun to get more done.